Hi, this is Zak Mir from Zak's Traders Cafe with a look at some bulletin board hero stocks on Thursday, the 19th of February. Starting off with Alba Mineral Resources, and the joy related to Horse Hill continues. A couple of days with the price action resting on the 200-day moving average at 0.38 pence. That's a bullish sign, especially as obviously the gap that we've had this week to the upside hasn't yet been filled. It might be filled, but at least while there's no end-of-day close back below the floor of this wide April trend channel of 0.24 pence and the 50-day moving average, we should be biased to the upside. Initial target probably towards 0.6, 0.7 at best, in the sense that there is resistance for the shares at the end of June last year in that zone. But best case scenario, the next, let's say, 2 to 3 months, could be up to as high as at the top of the channel at 1.4 pence. Obviously, that does appear to be a long way away, and the shares do have to cool off with the overbought RSI at 86. But long term, they could get up to that level, 0.6 to 0.7, as I said, if you are more cautious. Next up is Avocet Mining, which obviously after the recent mining recovery, one has to sort of kick oneself for not covering it more. But anyway, broadening triangle here from March last year, top of the triangle heading towards 7 pence as a 1 month target. Any weakness towards the 200-day moving average at 3.38 pence regarded as a buying opportunity. Ideally, the shares don't actually even go below the 10-day average at 3.97, ahead of about 7 pence target. Murata is next, and on this one I get a prize for being a little bit too cautious. Looked at it this time yesterday and thought, well, not too many people look at Murata, so it's probably not worth looking at the shares. But there was a double bounce for the RSI around the 50 level, neutral 50 level, as a leading indicator on upside, and the higher low for the second half of February at 4 pence plus the floor of this rising trend channel. That channel is pointing towards an 8 pence target, which is the 200-day moving average, and hopefully we will see that over the next month or so. If you're cautious on the stock, wait on an end-of-day close above 5.5 pence, which is the initial February resistance. The other thing is that we should have support coming in at or above the 50-day moving average as a best case scenario. Stop loss, obviously, that 4 pence level as mentioned before. Metminco currently on the in focus here as a bulletin board hero. Extended support here towards the 0.15 pence or 0.12 to 1.15 pence over the recent past. Looks as though we're building a base here. We're sort of turning around very, very slowly. The view here is that there's a line of support going heading towards the 0.1 pence level, and ideally we'll see the shares travel up to as high as 0.4 pence within this falling trend channel from April. Be cautious on the stock, obviously wait for an end of day close or a weekly close above the 200-day moving average at 0.21 pence, especially as that signal did actually fail before in October. But we've got this higher support here for February versus January, so that does give us a little bit of positive momentum here. Rare earth minerals, a stock I haven't looked at for a long time, and here we've got situation with the higher support here above 0.5 pence for February. That's compared to the what is that, 0.52 for December. The view now is that probably on this occasion, if we can clear the 50-day moving average of 0.7 pence, we'll get a decent rally. Initial target 0.88 pence, which is the 200-day moving average, but ideally rather more than that over the near term. The overall configuration here looks as though it is something along the lines of this, which would point to the top of this falling trend channel from March up to a penny. Solomon Gold, the final one, and here we've got the higher support here above the rising 50-day moving average at 1.73 pence. That should take the shares back up towards an implied target, which could be as high as 3 pence over the near term. That's the top of a rising trend channel from August, and is valid while there's no breakback below the 50-day average. Nice support there in the RSI window as well, with the double bounce off this line here from January over the course of February. That's it from me. More updates at the same time tomorrow.